Hey everyone, Daniel here and welcome back to another video. I hope all of you are having an absolutely phenomenal day out there as always. Here today, we got to talk about the Tattooed Chef, ticker symbol TTCF, which has been on an absolutely massive short squeeze over the past couple of weeks. And in this video, we have to talk all about the Tattooed Chef, exactly what this short squeeze means and why it originated, exactly what my thoughts are on the Tattooed Chef moving forwards, and we're going to reiterate my long-term price targets at the very end. So if you end up finding some value in this video whatsoever, please consider subscribing and let's get into it. So first and foremost, before we get started, we need to understand exactly what this short situation is with the Tattooed Chef. When someone shorts a stock, they're essentially betting that it goes down, and the way they do this is by going out to a larger financial institution or a brokerage and saying, all right, I want to borrow 10 shares of the Tattooed Chef at, let's say, $20. And what I do is once I receive those shares, I sell them immediately, essentially betting that the stock is going to go down to hopefully repurchase them at a smaller price. So let's say I borrow Tattooed Chef shares out at $20. I sell them immediately, hoping it goes down to 16. Once it goes to 16 bucks, I buy back those shares. I give them back to whoever I borrowed them from, and I pocket the $4 difference. That's essentially shorting a stock. And what we've seen over the past couple of weeks here with the Tattooed Chef, or at least over the past couple of months, is a larger downtrend with the stock. And what we've seen is a lot of these short sellers piling onto the stock and creating a situation where, one person shorts the stock goes down even further. Those people are even more incentivized to short even more shares. I just kind of want to show you the chart here before we actually kind of get into the deeper kind of, reasoning behind all of this. This major downtrend we've seen since January, absolutely massive, from right around $25, $26 per share, all the way down to 15, 16 bucks back in April. And what we've seen over the past couple of weeks here is a lot of very positive news, causing a very big change in sentiment at the Tattooed Chef, and thus causing a lot of these short sellers to be forced to close their positions. And once a short seller has to close cover their position, they essentially have to buy back their shares. They cause the share price to go up. And what we've seen is a lot of these short sellers covering their positions, causing the stock price to go absolutely parabolic over the past couple of weeks, from again right around 17 bucks back in the beginning of May to now $23 per share, up 8% on the day. Now, what is one of the things that causes or sparks a lot of these kind of short squeezes? First and foremost, you need a large short percentage, and I just want to take a look at this before we keep going. The short percentage for the Tattooed Chef right now sits at around 35%. Now, this is a couple days delayed, so currently it could be closer to 30, under 30%. But that's a lot. That is a large short percentage. And of course, it's not going to cause, a Tattooed Chef to double, triple, quadruple in stock price, potentially like we had with something like GameStop or AMC. But it could be and is being a massive catalyst for the company's kind of stock to continue going on a massive run over the coming weeks. And that is why we're seeing such a massive rally come from the Tattooed Chef over the past week or two. This large short percentage paired with a change of positivity with the company. There are three main news events that happened since right around May 12th. First and foremost, we had earnings. Absolutely phenomenal earnings. I have a video on this. I'll link it in the description down below. I thought they absolutely blew it out of the park. And one of the most kind of important things that you can take from that earnings report or from the earnings call, the kind of launch that they did with Target has, from Target's perspective, has been the most successful frozen food launch in the history of Target. Again, further showcasing exactly the power that the Tattooed Chef products have and exactly how much people like their products. Now, the next thing that happened after that, we got, the completion of the acquisition of New Mexico Food Distributors and Karsten Tortilla Factory, which will allow them to expand manufacturing in a massive, massive way. And over the next 3 to 4 years, will add an additional $200 million in annualized revenue to the company overall. Keep in mind, they acquired these two for in and around 35 million bucks. An absolute steal in my personal opinion. We got that. And then lastly, this came from about a week or two ago, a partnership with Whole Foods. This is very big, although they only launched two kind of products or SKUs in Whole Foods at this moment in time. It is a sign, because this is what we saw with Target, right? They started with Target with just a couple of products, their acai bowls. And what we saw with Target is, continued expansion throughout the store to a point where now they have over 15, 20 different products. So what investors are thinking, and what I personally think as well, is that over the coming weeks, months, and potentially years, Whole Foods will become a much larger partnership for them, and we're going to get a situation where it's not just 2 products that sell at Whole Foods, it's many products. It's 10, 20, 30 different SKUs that are selling at Whole Foods. I think, the Tattooed Chef makes, perfectly healthy, quick to make meals that are, perfectly favoring the millennial and upcoming generation. It's the ideal food for them. And I think Whole Foods is one of the ideal customers and one of the ideal stores for food that is quick to make, easy to make, that is healthy, that is vegan, that is vegetarian. And what we've seen over the past couple of weeks is a massive change in sentiment from an investor's point of view. And what we've seen is that be further kind of almost leveraged through the stock here because of how much it's been shorted, to a point where over the past week or two, we've seen an increase in share price from right around $16, $17 per share all the way up to $23. Now, will this continue? It very well could. We do have support, or rather resistance here at around $26. So there could be a situation where, it kind of gets caught up here at $26 per share. But, there's a lot of positivity around this company right now. It is one of my major stock market investments. I think it's now made up around 24% of my overall stock market portfolio. It's a company I'm really confident in moving forwards. And with all of this news and the massive short percentage at the company, I'm very confident that it will do very well over the coming years. Now, the next thing that I want to cover here, and this is very, very important, it's exactly the situation that's going on when it comes to the share price and my thoughts on the Tattooed Chef long term. When it comes to a massive increase in share price to either the upside or the downside, it's always important to take a look at your long-term price targets, take a look at them, reanalyze the company, and reanalyze the opportunity whenever it moves in a massive, massive way. And I really think that this is something that not enough people talk about. Having long-term price targets is extremely beneficial, as it allows you to keep a straight mind whenever a stock goes up in a major way or down in a major way. If I had a course, this would be such a big thing that I would emphasize on, just making sure you focus in on the company, the fundamentals of the company, no matter what the share price dictates. And this is what I want to do with you guys here today. When it comes to revenue, the company expects to hit $1 billion in annualized revenue by 2026 from their core Tattooed Chef business. They released this back in around November, and in my opinion, they sandbagged that. As a new company, I really do believe that given the growth that they're experiencing currently and the growth I kind of continue to expect them to experience over the coming years, I believe that this is a company that will reach $1 billion revenue run rate by 2025. Keep in mind, we also have a situation with the tortilla factory and the New Mexico foods. That whole kind of side of their business will add on an additional $200 million in annualized revenue by 2023. So we've got a situation here with the Tattooed Chef where we can expect in and around $1.2 billion in annualized revenue by 2025. Keep in mind, they're open to more mergers and acquisitions moving forwards, given that they have a lot of money on the balance sheet. No more dilution is needed, in my opinion. And you can always kind of consider this more kind of bullish $1 billion by 2025 from the core business to potentially price in one more acquisition, which in my opinion will come moving forward. So the company really re-emphasized that during the conference call. Now, when it comes to margins, this is very, very important. They say they want to hit 35% gross margins by 2025. They said this, and from that, they expect a 20% EBITDA margin or potentially a 15% net income margin. I think this is likely, but we do have to consider the fact that a lot of food companies out there have lower net income margins. So what we're going to do, we're going to take a look at my model here, try and price in this scenario, and then after that, I'm going to do a more bearish scenario, pricing in a lower net income margin, as a lot of people in the comments section did say that. So I just want to kind of value your opinion and, take a look at the opportunity with the Tattooed Chef if margins don't reach that 15%. So using a 15% net income margin, we get around $180 million in net income by 2025. And if we use a price to earnings ratio of 40, which keep in mind, this company's growing super quick. So, even though the industry potentially trades at a 15 to 20 price to earnings ratio, I think a double up of that is valued in the case of the Tattooed Chef, because this is a company going to be growing revenues 20% plus from 2025 to 2030, and you do need to value that with a higher multiple. Now, obviously, you can use a 30 as well. We'll experiment that in the Bearish case. Now, at the current valuation, they're trading at around a market cap of $1.87 billion, which, potentially by 2025, using this price to earnings ratio and this net income, we get a price target of around $88 per share. I do understand that this is on the bullish end of things and could very well not happen, but I think it kind of showcases the potential that Tattooed Chef has going forwards over the next 4 or 5 years here. Now, if we look at this from more of a conservative standpoint and say, what if the Tattooed Chef potentially doesn't hit some of these incredible numbers? Now, looking at this $1.2 billion figure, someone could consider that bullish, but honestly, at that point, you're just not pricing in the potential for another acquisition. So $1.2 billion, I'm going to leave that there. I don't think that needs to be changed, especially given the growth we're seeing in the core business and what we're expecting with potentially further acquisitions, which, what we just saw with this acquisition with the tortilla factory and the New Mexico foods, they're good at acquisitions. $35 million, an absolute steal. Now, when we look at margins, this is the one thing that we have to change. What if the company doesn't reach a 15% net income margin and gets something potentially more realistic, something maybe like a 10% net income margin, to a point where they only have around $120 million in total net income by 2025? Well, using a price to earnings ratio of 40, we still get a share price of almost $60 per share, upside of around 2.5x, which, given the massive run-up we've already seen in share price, in my opinion, is a pretty good return on investment, especially considering that this is more of a bear case, right? And obviously, if you add on a 30 price to earnings ratio, I think that's very unlikely, especially given the growth we're experiencing. It's still a double up, right? So you're pretty much still beating the S&P 500, even considering the more bearish case. But in my opinion, margins will be higher at this company, especially given that they're really focusing in on branding. And when you have a brand, you're able to charge more for food. And I really think that will allow them to have greater margins than a lot of these companies and will allow them to be much more profitable. But even if we price in that worst case scenario, that bear case, that 10% net income margin, we still get a situation where this company is still roughly a 2.5x from today's prices, even after this massive run up. So, when you talk about what am I doing? What am I doing in this situation? Am I buying? Am I selling? Currently, I have a lot of my portfolio in the Tattooed Chef, 22, 23%. I'm very, very bullish. Some of that is in actual shares. Some of that is in 2023 call options. I'm personally not selling because I still see a lot of opportunity to the upside, and I don't think that's been recognized with the share price as of yet, especially with the fact I didn't mention this previously, but they're starting to expand into the United Kingdom. There's photos coming out of them being in Costco's within the United Kingdom, which is absolutely huge. European expansion in 2021, this is more of a 2023 to 2025 thing that I was expecting with the Tattooed Chef. They're doing it this year. Absolute huge growth coming to this company. I'm not selling. Let me know what you guys are doing in the comment section down below. I really appreciate you all being here today. If you found any value in this video whatsoever, please consider subscribing, and see you all in the next one. Peace out.